Hey, what's going on, guys? Welcome back here to the pre-week analysis over here at CoreFX. This week we will be covering September 3rd to the 8th week. It's a holiday week with Labor Day off on Monday. Banks in the U.S. are closed. Forex, as you know, is open Sunday to Friday, so the Forex markets will still be trading, just a lot less movement and all, as the majority of the liquidity from the banks in the U.S. will not be open. Um, that being said, we have a very busy rest of the week as the slow summer months are coming to an end here. It's the first full week in September. We should have some strong moves returning back to the markets. And as you all know, as traders, we need strong moves to make money. So the more movement we get, the more opportunity there is. And it's starting to look like that is coming back. And this week we have a loaded schedule. So I'm going to try to move quickly here and hop right into it. Starting with last week's performance, we had the CAD, the Pound, and the Aussie as the top performing currencies. And then the weakest performing were going to be New Zealand, Swiss franc, Japanese yen. The biggest move of the week was with the New Zealand dollar, 1.19% to the downside. Again, not the greatest. That's a solid move, but the rest of the currencies didn't really change too much. So a little bit of a slower week we had here. Um, Even though we had NFP Friday, still wasn't too much going on. But breaking it down into each individual pair over this week, we'll start here with the US dollar. As you can see here, it ended the week overall pretty much flat. Started the week weaker and then got better than expected consumer confidence report, which sent it higher until NFP. There we saw sell off and then a quick reversal. Ended the week pretty much flat, just below that area we covered. But switching it over to the chart for the US dollar, you can see here last week we had this massive break and close below support here. This is a very bearish sign as we went over. Price managed to move lower, but then it came back up and retest this broken level here. Still remains under it, so overall we're still bearish with the outlook for the US dollar, but it's basically a retest right now. We didn't have a strong move to the downside yet, and although NFP was much worse than expected, we didn't really see a sell-off in the dollar here, so that could be some bullish signs. But overall, technically speaking, it's reversed, went lower, came back up for a retest. You see this pin bar candle here, somewhat of a shooting star, not totally, but nice rejection of the wick here. But we have another rejection here, so we've got some equilibrium right here with price, but I would still say overall we've got a bearish outlook here in the US dollar, um, especially since it shrugged off the bad NFP numbers. So pretty much got to wait for some confirmation either way, which way the dollar is going to go. Now, moving on to the euro. Um, as we went over, the euro and the dollar both we didn't cover in the strongest and weakest because they were pretty much flat on the week. As you can see here, where we opened on Sunday, we had a rally. Um, Opened up on the week, basically just some momentum from last week's gains, and then pretty much sold off until Thursday and Friday, where it just chopped around, as you can see here. Not too much going on, but we had a strong rally to begin, sell off, and then it kind of came right back up to around where it opened, slightly lower, but not too much going on there. Um, Again, this is a chart that we looked at last week and went over, and it's pretty much doing the exact opposite of what the dollar's doing. You can see it's been in a strong uptrend. As we went over, it broke and closed above this resistance. Very bullish. Shot up, came back down to retest, and has been bouncing along around right here at this broken resistance, now turned support. Basically a mirror image of the dollar, just inversely. Again, very critical level on the chart, but we need confirmation either way to which way it's going to go. Is it going to roll over, retest this, maybe continue lower, or are we going to get a break higher, break above this high, then maybe pull back to that high and continue higher? This is something that we as traders need to wait for confirmation of. We can't just take a guess right now either way, but technically speaking, technically speaking is based off prior historical price action and things that are most likely to reoccur. It looks like this is just a retest and the price will continue higher, but again, we need some confirmation here before we can totally decide that either way. Moving on to the yen. Japanese yen was one of the worst performers this week. We can see the markets opened up higher as risk off was in the markets a little bit to begin the week, and then you can see the strong sell off the rest of the week. A little bit of a rally here, and then it ended the week lower overall. No news out of the yen this week, but the U.S. stock markets rallied most of the week, which this is a safe haven currency. It's risk on in the markets would be bearish for the yen, so there was risk on theme, and the money left the yen and went into riskier assets like stock market. Switching it over to the yen's chart. As we went over last week, it was basing underneath this resistance here. So this past week, it did break above the resistance, but quickly dropped back under. This is a fake out, and it's an outside reversal. Broke outside, reversed back in, came down and actually managed to break this trend line, break this support area in here, and is now closed down below here. So you can see it's under the 20 SMA, in between the 15 and the 20 and above the 200. But you can see here we're now at jeopardy of possibly breaking down below this support and rolling over. As you can see here, this was a nice uptrend. Broke out with the fakie, came back under, gap down lower, is now down here. Moving on to the pound. As you can see, this is one of the better performers on the week. Opened up, continued higher, then had slight sell-off for a decent amount of the week, and then it ended the week with another rally, ending higher than it opened. Again, not too big of a move, but we can still see this is still higher, and it rallied back above there. Switching over to the chart, we can see that the pound has been in this uptrend, and then it broke this new lower low a couple weeks ago, and then last week we saw it come down again, and we were thinking it could possibly retest this support turn resistance and roll over as it broke this trend line. But you can see here this week it rallied higher and actually managed to close back up above this resistance that was support that we're looking at. So this could potentially be a bounce from this trend line's confirmed, and it could be a bounce to continue the uptrend back higher. We'll see. We've got some overhead support here in this area, so we'll see if price can break back through this trend line and continue higher here with the pound. They had better PMI numbers this week, which added some confidence to the manufacturing sector and basically the overall economy there. So we'll see if the numbers this week coming out of the pound are able to continue this back to an uptrend. Moving on to the CAD. The CAD's the currency for me to watch. It was the best performer of last week. It's got a lot of news ahead this week, and their economy's been doing great. They hiked interest rates for the first time in a while this year, so there's a lot of eyes on the CAD right now, and there's a lot to expect out of the CAD. All eyes are bullish for me. Last week, we'll go over this happened this past week. It sold off until Thursday, where they had much better than expected GDP numbers. Again, GDP is the gross domestic product. It basically shows the overall production and health of your economy, and this number was better than expected, good amount. And the numbers out of Canadian economy have been great for a while now, which is why they hiked rates back in May of this year, and there's been potential for them hiking again this year. We'll go over that in a minute, but this really changed the outlook and analysts' views of what the central bank's going to do over there in Canada. So aside from the great GDP numbers, they also had there was also a rally in the stock market, so a little bit of risk on could help boost this up as well. But switching over to the CAD's chart, it's a great chart here. As we saw last week, price had come up to had started to come up to the high here, and we saw price around here, and we figured it would probably come back up and retest this high, maybe form a little basing pattern before breaking out or so. But you can see price sold off in the CAD to begin the week, tapped back around this 20 SMA, this support resistance area here, and then shot all the way up and closed the week broken above this massive level. This is a weekly level, and it hasn't been this high since July of 2015. So 2 years ago it was this high. Again, just like the euro and dollar, breaking into new levels on the chart. This broke out. We could expect potentially a little bit of a retracement back, possibly to retest this, and then maybe price shoots higher here off of that. Again, we have a big week for the CAD coming up here, so expect some huge moves next week. And technically speaking, this just broke out of a really nice level. This M formation could be a reversal pattern, but as you see, price broke above it and invalidated it with a close above these highs. As we now look higher with the CAD. Moving on from the CAD, we switch over to the Swiss franc. Swiss franc's been a really ugly pair. I'm trying to stay away from trading it as much as possible. Nothing. I follow strong trending currencies and pairs and matchups, and this has just been a ugly, ugly chart. As you can see again this week, the Swiss franc was one of the weaker performers, but it shot up, then it shot down, then it shot back up, and then ended the week down. It rallied Sunday and Monday with a risk off move, and then sold off hard till Thursday. Basically chopped the rest of the week. Moving it over to the chart, which I really don't like. As you can see, it's just been ugly. All through here, it's just been ugly, ugly, ugly. But we had price shoot all the way back up to almost touch the prior high here this week, and then it shot all the way back down, bounced off the support, shot right back down to the support. So now price is down at the support level here. We could have price break lower and come back down to retest these prior support levels, or possibly bounce off this and maybe make its way back up to this high again. Either way, I'm not looking too much into the Swiss franc, as it's just been really ugly price action. Nothing really going on there for me, but still something we cover. Moving on to the Aussie, another great chart, another great setup. I like moving forward. This was a wild week for the Aussie in terms that it didn't end the week on much of a difference, but through the week we had a sell-off to start, sharp rally, then a strong sell-off, then ended the week with a strong rally again. A lot of this has to do with risk off, and then they had positive numbers fundamentally out of the Aussie, and equities probably helped it rally here. Moving over to the chart for the Aussie. Last week we had it in a bull flag, and this week we got our breakout. It broke out, then came back under, but then it ended up breaking back out, closing up above this range here. Pretty much doing exactly what we had anticipated, and price is now closed up above this resistance outside of this trend line of this bull flag here. And all eyes are north with Aussie as well for me as it breaks out of this bull flag. Moving on finally to the New Zealand dollar. New Zealand dollar rallied early in the week and then sold off the rest of the week, thanks to Governor Wheeler's speech. As you can see here, it just rallied up a little bit and then continued to sell off, and then basically a bear rectangle basing pattern down here at the lows afterwards. But as we went over last week, there was a massive head and shoulders pattern here on the daily for the New Zealand, and just like we predicted last week, you can see it broke this strong support here at 72 and has now sold off lower. That's exactly what we had called last week in the pre-week analysis. If you were watching, hopefully you took advantage this week and made some money off of it. But can expect the New Zealand dollar to continue to be bearish as it broke this very key level here. I would expect possibly a retest of this level, but as it has retested already last week, it could just roll over, and I would see it going down to 70-50 area in the near future, as the New Zealand dollar should probably continue to sell off here. That pretty much covers the major currencies and what we saw this week. Moving on from that, we will go and cover the news events from last week, what major events happened, and what we got here numbers-wise. The three major events really to take out of the week. The first one was Governor Wheeler of the Reserve Bank New Zealand gave his last major speech, really. He's stepping down September 26th. Had a wild term. He had the hike rates back in 13 and 14, I believe, and then they ended up having to back off on those as economic conditions changed. And basically, he's done a good job for them, but it's been a wild term for him. And he's stepping down the 26th. They'll have an interim takeover for 6 months until they choose who the long-term replacement's going to be. But this was his last speech. Basically outlined criteria for removing the loan-to-value ratio restrictions in their housing market, but he set no clear time frame or anything. And this is a topic that we don't have time to go into in here. But basically sent the New Zealand crashing the rest of the week. And they haven't had the greatest numbers as we've gone over recently, so there's nothing too positive coming out of them right now. Although the Aussie and Chinese economies are doing good around them, this I don't see too much long-term bearishness in New Zealand, but they got some stuff going on over there to figure out. Second major event was CAD's GDP, as we briefly went over. It beat expectations by a decent amount. We've been seeing great numbers from Canada for a while now, and the currency's just been on a kick higher, and I don't see it stopping anytime soon as central bank meets this week, and I think they might hike rates this week. If not, they'll do it next month in October. So, although either way, the currency is very bullish right now. And then we had the USD non-farm payroll, the employment numbers out of the U.S. that come every Friday, first Friday of every month. Basically, recapping the job market the prior month before, and goes over the unemployment rate in a percentage, the number of jobs created, and then you've got, not including the farming industry, and then you've got the average hourly earnings. And I'll go over it as we cover this past week. But starting with Monday here, we didn't have anything, just money supplied, nothing worth going over out of Europe. U.S. dollar. This kicked the U.S. dollar off to a decent start on the week as the consumer confidence was higher again. Again, we went over this last week. Basically, just the feelings consumers have of the economy, their outlook on how much they're going to spend and all. Continues to be a high number. Consumer confidence is at highs it's been in a long time in our country, and it's just continuing to be strong. And then this Tuesday night's when we had Wheeler speak, as we just went over. Moving into Wednesday, the ADP prediction of their prediction for the non-farm payrolls, they predicted it to be over 200,000, 237,000 new jobs created in August, which would have been huge because August has notoriously been a month where we missed numbers, I think 5 years straight now. And hitting over 200K in any month really is a lot, but in August by that much was a lot. So the dollar initially moved forward. Little do we know there was a big surprise on that Friday. Preliminary GDP out of the U.S. was better than expected. They're predicting 3%, which is great. This also added to the stock market and the dollar going higher. As we see here with crude oil inventories, we missed again. Nothing too crazy there. Manufacturing PMI out of China continues to be better, so their economy's looking good. Australian dollar, this is a little bit of good news they got here in the private capital expenditure. I went over this last week, but that was a decent amount higher than expected. So there's a lot of capital being invested into expansion, which is good. Thursday, we had the CAD's GDP numbers that we said was much better than expected, 0.3% versus 0.1%. It's their month-over-month reading, but this was great. This is a good report for them. And then we came into Friday with the pounds manufacturing PMI. Beat expectations again. This is a leading indicator for the manufacturing industry from a survey of a bunch of purchasing managers from big companies and all. So this is a good reading. It shows that there's good strength in the manufacturing industry moving forward. And then we come to the non-farm payrolls, NFP, employment rates out of the U.S. As you can see, across the board, it missed expectations. Unemployment rate went back up a little bit to 4.4%. Again, still a great number. Nothing really to worry about too bad there, but it went up. The 237,000 jobs reported that ADP predicted was dead wrong, and it was 156,000 jobs, which was a decent amount lower than what the analysts had predicted. And average hourly earnings still struggle here as we miss again to have some earnings increase. This is a problem going on around the world. Low inflation and low earnings. So the wages people are making from work aren't as high as they should be, and this is resulting in less spending, less money in people's pockets, less savings, less everything. So this is something that's been watched very, very closely. The interesting thing about these numbers this week is, for one, the U.S. dollar initially tanked, but then it reversed those gains almost immediately and closed the week back up near resistance, like we went over. But this is the kind of report that you would think would tank the dollar. But the fact that the dollar showed some resilience here and didn't affect it too much is a very, very big sign to me that the dollar could be bottoming out here and could start reversing this downtrend here as this strong of a number here didn't really affect it. And also the U.S. stock market, it totally shrugged off these bad numbers as well. As you can see here with the S&P 500 chart, you can see the week opened slightly lower here on Monday, and then you got, due to all those numbers we saw, we got Tuesday, Wednesday, Thursday, Friday, price just the markets just shot higher all week. Huge risk on move week, and came back up to these highs right here under 2,500. So again, Friday wasn't the best day for the markets, but considering those bad numbers came out and they still closed up on the day, shows that it just completely shrugged it off and didn't even pay attention to the bad numbers, which shows some strong. It shows that people are seeing that there's enough strength and growth in enough other places to confirm that this isn't a big deal, as we saw with the GDP numbers, you know, and we've been seeing pretty much across the board with a lot of indicators of the U.S. strength. This is just showing that they're shrugging it off, not a big deal, and markets continue higher. So, this could mean that stocks are going to break out this week higher, and we'll see some more risk on move, or the dollar could continue higher, and we'll see what goes on this week. But again, this next week ahead is a holiday in the U.S. It's Labor Day. So on Monday, all the U.S. banks are closed. All the trading big institutions and all are closed. So there's not going to be much going on in Forex, but the rest of the world is open, so there will still be trading and there will still be moves, just not necessarily as strong. It might be a little bit slower of a day and week for that sense, but hopping right into these reports here. Beginning with Monday, we've got the construction PMI numbers out of Great Britain. Again, this is just another leading indicator. This is gauging the strength of the construction industry. So last week we had manufacturing numbers. PMI numbers were strong. Let's see if we can get. We have construction and services numbers this week out of Pound. Let's see if we can get some continued strength in these numbers. This could push a rally back to the Pound. And then moving to Tuesday, as I said, this week is loaded, so we've got a lot to go over here. Tuesday, the Australian Bank, Central Bank, Reserve Bank of Australia, meets and has their cash rate statement. They meet the first Tuesday of every month, not including January, so they're going to meet 11 times a year. A little more often than other banks, so it's not as crazy since it's so much more often, but still expect some good moves for the Aussie. Not likely to hike rates. They've been on a cycle of cutting rates. Back in 2016, last year, they cut rates from 2% down to 1.75, then again to 1.5, as inflation hasn't been a problem. So the focus really is going to be on the statement, the speech afterwards from Governor Lowe. How he words things and his outlook on the future. Last meeting, his outlook remained the same. He's hopeful for the global economy. He's starting to see a return of inflation and contractionary monetary policy, mainly from the U.S. with our hiking of rates. But now you got Canada following. Hopefully this throws us into like a rate cycle around the world as the economies start doing better. And basically just going to be watching the wording on the future outlook of economic growth and inflation. And if there's any changes in their outlook, expect them big moves. If there's not, there'll still be some moves, but might not be too crazy. Moving on to the Pound, we have the services PMI. Again, this is just a gauge of the services sector based off some surveys done from purchasing managers. And then you've got Lowe speaking again here at 5:01 at the dinner over there. Not too big of a speech. It's a short speech. Shouldn't be too much going on. But then you have that night, you have the GDP numbers out of Australia. Again, we went over the importance of this. This is released every quarter, this reading. And this could cause some volatility as well. Moving on to Wednesday, starting at 8:30 a.m., you've got Canadian dollars trade balance. This is going to be the difference between their imports versus their exports. And obviously, you want a surplus on exports over imports. It means you're sending goods overseas more and you're making more money on selling things as opposed to buying from everyone else and increasing your debt there. But moving on right from that, we go to Canadian dollar has their central bank meeting, which meets 8 times a year like the Federal Reserve. They'll go over their overnight rate, these rates that we go over here that I told you I believe the chances of them hiking the rates this meeting has gone up. It's not too high of a chance, but definitely higher than it was prior to the GDP reading last week. They are meeting 10 a.m. The hiking rates here after this strong GDP, it's most likely going to happen either this month or next month in October's meeting. They hiked back in May, like I said, for the first time in a while, and they've been seeing great numbers out of the Canadian economy. So I would say either this meeting or October they'll hike it, and if they hike it this week, this could continue to see a skyrocket in the Canadian dollar. If they don't hike it this week, depending on their wording and how dovish or hawkish they seem for October, could see a slight sell-off in the CAD. I don't think we'll see anything too crazy unless they take October off the table for being hiked. Then I could see that causing some serious bearishness, but high chances of that not happening. So I'll be looking for a strong Canadian dollar coming into this meeting. U.S. dollars, non-manufacturing PMI numbers, not a big deal there. Then you've got the Australian dollar retail sales and trade balance at 9:30. Again, a lot of news out of Australia this week. The Reserve Bank meets prior to all these releases, so it's good when they meet after these releases because then you can get an idea of what they think has changed based off the data. But these releases are coming after, so we'll see what happens and how it gets guided here a little bit. But yeah, so that's Wednesday. Moving into Thursday, another central bank meeting. You've got the retail sales we've already gone over. It shows the strength of the retail industry. Huge part of the economy, so this is a very closely watched number, and we'll be seeing how that number prints there, and the trade balance as well. There's a difference between exports and imports. We'll see how they do there. Just went over that, but euro with the central bank meeting, they call it the minimum bid rate, but this is their rate statement as well, and all ears will be on Draghi this week. As we spoke a little bit last week, the euro's just been killing it all year. It's been as strong as can be, and they've had strong economic numbers coming out of Europe as well, backing it. But inflation is still low, and the massive stimulus that the central bank over in Europe has been doing, it's set to expire this year, so they're most likely they're going to be developing a new plan of action. And this meeting here, he should go over that. I expect with how high and strong the euro has been that he could come out and jawbone it lower a little bit. Basically, come out a little more dovish and say some stuff that specifically worded to weaken the euro, which we could see come out of this. If he fails to jawbone it lower, then we could see a strong rally in the euro continue. But overall, I expect the euro to weaken a little bit from this as Draghi talks it a little bit lower. Like I said, though, this week is just absolutely loaded. The press conference after the rate is issued is the main thing we watch for, as we don't expect any changes in this rate amount at all, but his wording is what we're looking at. Crude oil inventories out of the U.S. Every once in a while it's on Thursday instead of Wednesday, and that's this week. And then you've got trade balance out of China Thursday night. That's another big one to watch, as China's the biggest exporting manufacturing nation right now, and they do a huge amount of trade internationally. So this number is very closely watched for all around the world to gauge the overall global economy, as it shows how much business they're doing, how much they're sending as opposed to what they're bringing in, and just shows the overall strength of their economy there with regards to trade. And then Friday we've got Lowe speaking briefly at a celebration dinner. Again, not a big deal, but since they meet early in the week, and then there's a lot of data out of Aussie the rest of the week, there could be some stuff said in here that could cause some strong moves from the Australian dollar. You never know. And then the pound's got manufacturing production, which we went over before. It's just a number to show the amount of goods produced manufacturing-wise out of Great Britain, so that's closely followed for the manufacturing sector. Then you've got the Canadian dollar's unemployment rate. This is basically the NFP of Canada, and they have it once a month as well. And this shows the change in employment numbers as well as the unemployment rate. And again, strong numbers here could continue to propel the CAD higher, as the Canadian dollar's just been killing it. Their economy's been doing great. They're starting to hike rates again, and all signs point north, really. Pretty much covers it. I can quickly go over here the gold chart because it just broke a key level as well. As you can see, gold broke out of this strong zone here, fell back to retest it, and has now bounced strongly off of it and closed at a new high. Gold could be going up this week. We'll see. A lot of it depends on what's going on with the risk on, risk off theme in the world, how equity's doing all. But this is another chart here I just wanted to touch on. I'm not going to go over a bunch of other charts this week as this is already a half-hour long video. I like keeping it around 20 minutes, but there was a lot to cover this week. So just wanted to make sure I got through it all. And that pretty much does it. Keep an eye on my Instagram. I'll be posting up charts that I do with core.fx. Check out the website, corefxtrading.com, if you want to become a student. Like and subscribe to these videos here. I appreciate it. I've been getting a lot of great feedback since I started doing these videos, so I'll definitely keep them coming. Keep the subscribes coming if you guys like what you see here. Follow me on all those things I just said and subscribe on here. If you don't like what you see here, you can fuck off. Yeah. Like, subscribe, follow. Give me a shout out if you like it, if you want me to cover anything differently. If you have any pairs you want me to check out, shoot me an email, shoot me a message. And I appreciate you guys taking the time and support and all for all this stuff. So thank you guys very much, and I'll see you next week.